Hi, welcome to Simply Current Affairs. We are coming up with our next initiative, that is Economics Explained. So how it works? Every week I will be coming up with one or two videos where I will be discussing economic current affairs in detail. Most of the aspirants find difficult in understanding economic current affairs because they lack clarity on the basic economic concepts. To address that problem in this initiative, I will be discussing economic current affairs along with the economic basic concepts for having 100% crystal clear clarity. This initiative is going to be very useful, and watch this video till the end. At the end, I am going to give you an interesting exercise. I'll be sharing the notes of today's content as well. You can download the notes by clicking the link given in the description. So in our today's topic, in our first topic, we are going to discuss about GST 2.0. So before understanding GST 2.0, we have to understand what is GST. And before understanding what is GST, we have to understand what is indirect tax, because GST is an indirect tax. And before understanding what is indirect tax, we should know how it is different from direct tax. Alright? So first we will understand what is direct tax. See, direct tax, as the name says, these are taxes which are paid by the taxpayer directly to the government. For example, let us take income tax. Government is imposing income tax on Guna, and Guna will pay that income tax directly to the government. Right? So that is direct tax. It is paid by you directly to the tax authority. Now what is indirect tax? You will not pay it directly, rather you will pay it indirectly. For example, you are going to a restaurant. You are having food. While paying the bill, you will pay GST. While paying the food bill, you will pay GST. That means you are paying GST to the restaurant, and restaurant will collect the GST and will give it to the government. So you are not directly paying to the government. You are paying to restaurant, and restaurant pays it to the government. This is called as indirect tax. Example, GST. So GST is an indirect tax. GST was introduced in the year 2017. In 2017, July 1st, GST was introduced. GST subsumed most of the indirect taxes. Even before GST was introduced, there were many indirect taxes. Most of the indirect taxes was replaced by GST. So to understand GST, we should know what were all the taxes present before GST. So before GST, what were all the indirect taxes present? I have given a few here: excise duty, service tax, value-added tax, customs duty, entertainment tax. So before GST, there were many indirect taxes. After GST, GST has subsumed or replaced most of the indirect taxes. Now, to understand the concept of GST, you should have clarity on this value-added tax. I will tell you why. And to understand VAT, you should know about something called as sales tax. Sir, what is sales tax? Sales tax is a tax imposed on sale of a good. Whenever a good is sold, tax will be imposed. That is called as sales tax. Sales tax is a tax imposed on sale of the good. Right? Now, there is a problem. There was a problem in the sales tax. The sales tax was facing a problem. To address that problem, value-added tax was introduced. So, let me explain sales tax, then VAT, then we will go to the GST. To understand the sales tax, let us take a scenario. So, here we have a farmer who is selling wheat. We have a farmer who is selling wheat. He is selling the wheat to a bakery, Guna bakery. Now what does this bakery do? Bakery is buying the wheat. It is processing the wheat. It is adding value to the wheat. And finally, the wheat is transformed into bread. It is transformed into bread, and the bread is purchased by the consumer. So here we have a wheat seller, we have a bakery, and we also have a consumer. Three players we have. Now with this, let me explain sales tax first. So let us assume the sales tax was 10%. Let's assume the sales tax is 10%. So whenever a product is sold, tax has to be imposed. So let us take wheat. I am assuming the wheat price is 40 rupees. Now when the wheat is sold to the bakery, sales tax has to be imposed. 10% tax has been imposed. 10% on this 40 rupees is 4 rupees. So 40 plus 4 is 44 rupees. So this is 44 rupees worth wheat. Right? So now this 44 rupees worth wheat is now sold to the bakery. Now it is sold to the bakery. Now what bakery does? Bakery buys this wheat. They transform that wheat into bread. And now the bread is worth 100 rupees. Wheat is 40 rupees. After paying tax, wheat became 44 rupees. The bakery has purchased the wheat. They transformed it into a bread. And now bread is sold in the market. When bread is sold, again sales tax has to be imposed. 10% tax has been imposed. Now it has become 110 rupees. So this 110 rupees worth of bread will be finally purchased by the consumer. Very simple. Whenever a product is sold, 10% sales tax were imposed. When wheat was sold, 10% tax. When bread was sold, 10% tax. Now, in the first stage, when the wheat was sold, there is no problem. In the first stage, there is no problem. But look at the second stage. The second stage, there is a problem. So, this 100 rupees worth bread, that we will expand it. This 100 rupees worth of bread is nothing but 40 rupees worth of wheat. That 100 rupees worth of bread includes 40 rupees worth of wheat plus 4 rupees of tax. We have paid this tax already, right? So 100 rupees worth of bread includes 40 rupees worth of wheat plus 4 rupees worth of tax plus 56 rupees worth of value addition. Value addition means what? Guna Bakery purchased the wheat and transforming that wheat into bread. That transformation is called as the value addition. That transformation has a cost, that is 56 rupees. So 100 rupees worth of bread includes 40 rupees worth of wheat, for which 4 rupees tax is paid plus 56 rupees worth of value addition. Now, by imposing 10% tax on this 100 rupees, by imposing 10% tax on this entire 100 rupees, by imposing 10% tax on this entire 100 rupees, we are paying, or we are imposing tax on the part for which tax is already paid. See, I repeat, by imposing 10% tax, on this entire 100 rupees, what we are doing? We are imposing tax on the part for which already tax is paid, yes or no? This 100 rupees worth of bread includes 40 rupees worth of wheat, for which tax is already paid. Now, if you impose 10% tax again on this entire 100, that means the wheat is taxed twice. Wheat is already taxed once here. Then second time, while selling the bread also, if you are going to impose tax, then that means wheat is taxed twice. This is called as double taxation, or this is also called as cascading of taxes. This is also called as cascading of taxes. So, by imposing 10% tax on this entire 100, the final price becomes 110 rupees. The final price becomes 110 rupees. Right? But imagine, instead of imposing this 10% tax, into the entire 100 rupees, instead of imposing on this entire 100, what is right? Imposing the 10% tax only on the value addition part. That is what is correct. That is what is justice, right? We should not impose the 10% tax on the entire 100. Rather, we have to impose that on only on that value addition part. So, when you impose the tax only on the value addition part, the price reduces, yes or no? So, what happens? Final price, 100 rupees worth of bread plus 10% tax will be imposed only on this 56 rupees. So, what happens? 5.6 rupees will be the tax. 10% on this 56 is 5.6. That is the tax on the value addition. So 100 rupees worth of bread plus tax on the value addition part, that becomes 105.6, or we can round it off to 106. So finally, the end consumer will be buying the product for 106 rupees. In sales tax regime, we were facing the problem of cascading of taxes. This was the problem in sales tax regime, because in sales tax, the 10% tax was imposed on the entire product. Now, when we impose tax only on the value addition part, then the tax rate will come down, the product price will come down. So this concept of imposing tax only on the value addition, that is called as value added tax. Very simple. It is so explanatory. In value added tax, the tax will be imposed only on the value added part. So when you impose tax only on the value added part, this cascading of taxes problem will not be there. This is the beauty of VAT. Alright, sir. Alright, so we have explained sales tax, I have explained what is VAT. Now, how VAT is related to GST? You might ask, how is VAT is related to GST? You have to understand, in principle, conceptually, VAT and GST is one and the same. Both are same. The philosophy, the principle behind it is same. GST is also a value-added tax. Understand? See, the difference between VAT and GST, we have to have some clarity. There is a slight difference. Concept is same. GST is also a VAT, no doubt. Okay. So, value-added tax, it is imposed only on goods. But however, GST imposed on goods and services. VAT, different states were having different VAT rate. Different states, different VAT rate. In Maharashtra, VAT rate will be different. In Tamil Nadu, VAT rate will be different. The tax rate will be different. But GST, one nation, one tax rate. Right? The next difference is VAT replaced sales tax. VAT replaced sales tax. GST replaced most of the indirect taxes. This you keep it in mind. Apart from that, VAT and GST, concept wise, both are one and the same. Right? But understand, GST, the way how government collects GST is slightly different from VAT. The way how government collects GST is different from VAT. We will try to understand. Briefly, we will try to understand. Okay. Again, let us take the same example, Guna Bakery, the same example will continue. So here, we know when wheat is sold, there is 10% tax. Okay. 44 rupees, that means 40 rupees plus 4 rupees of tax. When bread is sold, 100 rupees plus 10 rupees of tax. In GST regime, what government says? Government says, see, though VAT and GST are conceptually same, the way how GST is executed is different. So what government says? Let all the tax be paid. So here, this 4 rupees tax will be paid to the government. Similarly, in this case, the 10 rupees tax will be paid to the government. So what government says in the GST regime, what government says? In every stage, when wheat is sold, okay, 4 rupees tax, let it be paid. In this stage, bread, 10 rupees tax. 10 rupees tax involves cascading. But government says that's okay, you pay. Government says it's okay. And remember, in this example, Wheat and bread is the output, wheat is the input. Yes or no? In this example, bread is the output, wheat is the input. We are giving wheat as the input. After processing, we are getting bread as the output. Keep that in mind. So this tax is nothing but tax on the input, and this tax is nothing but tax on the output. Keep these terms in mind. So the tax on the input is also paid to the government. The tax on the output is also paid to the government. Remember, this 10 rupees tax involves cascading effect. That even government knows it. In GST, government says, please proceed. So once after paying everything, you know what government will do? Government has received both input tax as well as the output tax. Both the taxes government received. So in GST regime, government will retain, or government will keep the output tax with itself, and government will refund this input tax. So first stage, what government does, it collects all the taxes. Cascading will be there. Government will collect all the taxes. And finally, government will retain the output tax. And this input tax of 4 rupees, that will be refunded. And that refund is called as ITC. Now we will understand what is ITC? Input tax credit. The input tax of 4 rupees will be credited back. That is why it is called as ITC, or we can simply say GST refund. And this GST refund, we will be thinking that GST refund will go to the consumer. Yes or no? We will be thinking that the GST refund will go to the consumer. But in reality, it will not go to the consumer directly. Rather, the GST here will go to the bakery. Because see, government wants to give this refund to the consumer only. But do you think it is practically possible? Do you think government can directly go and give the refunds to the public? It is not possible, right? So what government does is, instead of giving the refund to the consumer, that is not practical, the refund will be given to the bakery. The idea is the bakery, next time when they sell this bread, they should not sell for 110. Why? Because the bakery has received refund of 4 rupees, right? 4 rupees of refund the bakery has received, right? So next time when the bakery sells the bread, they should not sell for 110, they should sell it for 106. They have to reduce the price. They have to transfer this GST benefit to the consumer. Now you might ask, sir, it looks very idealistic. What will happen if they do not pass on the benefit? If the bakery gets the refund, Guna Bakery, I get the refund of 4 rupees, I keep it in my packet and I sell the bread for 110. If I continue to sell the bread for 110. So originally I should, after getting the refund, I should sell for 106. But I am not passing the benefit. I sell it for 110 only. Who knows? People will not know about GST, right? Who knows about GST? So if I sell it for 110 rupees, that is called as profiteering. So when the bakery is not passing on the benefit of GST to the public, that is called as profiteering. How they can pass to the public? By reducing the price of the bread. If some bakery is not reducing, then we have to take action, right? So to take action on those entities which are practicing profiteering, government created National Anti-Profiteering Authority. To take action on those entities which are practicing profiteering. That means if the tax is not, if the tax refunds are not passed on, that is called as profiteering. To take actions on those firms which are involving in profiteering, government created NAPA, but now we do not have NAPA. Rather, to take action on those firms involving in profiteering, Competition Commission of India will be responsible. So for this purpose, for anti-profiteering, only government came with NAPA, but now there is no NAPA. Government felt that Competition Commission of India take action on those firms who are involving in profiteering. Right? Understood? See, GST alone we can discuss for a teacher to take even a couple of hours in detail to understand. But for the exam point of view, this much is fine, right? I have just introduced you to GST, right? So I have introduced you to the concept of GST. I hope you have clarity. Now I will give a simple explanation for GST, okay? When a product is taxed more than once, when the same product is taxed more than once, then government will refund the taxes. When a product is taxed more than once, what government will do? Government will retain the last tax, the output tax alone government will retain, and government will refund all the input taxes. This is how GST works, very simple. Right? You got clarity? Shall we proceed further? So in 2017 July, as I said, the government introduced GST. Now this GST has replaced most of the indirect taxes. This GST, as I said, has replaced almost 17 indirect taxes. Almost 17 indirect taxes and 13 cess were replaced. Sir, what is this cess? We will discuss it in some other video. As of now, imagine cess is a type of tax. We will refer this cess as tax on tax. Let me explain about cess later. For time being, understand cess is a kind of tax. So GST replaced 17 indirect taxes plus 13 cess. Remember customs duty. Remember, customs duty is outside GST. GST has not replaced customs duty. Okay, GST replaced most of the indirect taxes, but customs duty still continues. GST has not replaced customs duty. That alone you have to keep it in mind. Alright, now some more information about GST. Let us try to understand. This GST was introduced via a constitutional amendment through 101st Constitutional Amendment Act. GST was introduced. So the constitution was amended. Why constitution was amended? See, I was showing a list of indirect taxes, right? I was showing a list of indirect tax: excise duty, sales tax or VAT, service tax. I was showing a lot of, even before introduction of GST, there were many indirect taxes. Now these indirect taxes, some of the indirect taxes were controlled by state government, some were controlled by central government. For example, service tax was controlled by central government. Sales tax or VAT was controlled by state government. Now GST is replacing most of the indirect taxes. GST has replaced, or GST has subsumed sales tax and GST subsumed service tax. That means the taxation powers of the state government and central government is getting affected. It is getting changed. The federal feature is getting changed. That is why introduction of GST warranted a constitutional amendment. Right? In this constitutional amendment, GST was defined. GST was defined. What is GST? GST is a tax on supply of goods or services or both, excluding alcoholic liquor for consumption. This is how GST is defined in the constitution. GST is a tax on, I have given those notes. So GST is defined as any tax on supply of goods or services or both, except taxes on supply of the alcoholic liquor for human consumption. That means GST can be imposed on any goods and services excluding alcohol. Sir, today electricity, petroleum products are outside GST. That is temporarily outside GST. There is something called as GST Council. I will explain. When the GST Council decides, electricity, petroleum products can be brought under GST from tomorrow. But if you want to bring alcohol under GST, then you have to amend the constitution. You have to amend this definition. Okay, so GST is defined as the tax on supply of goods or services, excluding alcoholic liquor for human consumption. Right? So this constitutional amendment is empowering. It is empowering both Parliament and the state legislature to enact laws regarding GST. And this constitutional amendment also sets up a new body called as GST Council. GST Council. So as per the constitutional amendment, there will be a GST Council set up by President of India. That GST Council will recommend all decisions related to GST for Parliament and state legislature. So GST Council will recommend anything and everything related to GST to the Parliament and state legislature. And this GST Council will be set up by President of India, and this GST Council is headed by Finance Minister. Finance Minister is the chairperson of GST Council. Who are all the members of GST Council? Finance Minister, Minister of State under Finance Ministry. All the state governments will be sending their representative. Usually all the finance ministers from the state government, they will be representing the states. All the union territories with the legislative assembly, union territory with the legislative assembly, they will also be sending their representatives. So central government has representative, state governments will have representatives, union territory with the legislature will be having a representative in this GST Council. This council alone is a very big topic. This council alone is a very big topic which we will discuss in another class. Right? So GST Council is constituted by the President, and the council will make a recommendation to the central government as well as states on issues related to GST. It is a GST Council. It is this council which will be deciding which goods, which services should be brought under GST, which should not be brought under GST. Right? What should be the GST tax rate? For which good, which rate? All these recommendations will come from GST Council. So we know that under GST we have 4 tax rates: 5%, 12%, 18%, 28%, and we have 2 special rates. We'll forget about the special rates right now. So broadly we have 4 slabs. Okay. Certain items will come under 5% tax slab, certain items will come under 12% tax slab. All these slabs were decided by this GST Council. All these were decided by the GST Council. Okay, so before going further, some more points on GST. See, 8 years of GST, friends. 8 years of GST. This 8 years. Look at the tax base expansion. In 2017, when it was introduced, there are only 66.5 lakh GST payers. It got increased to 1.51 crores. The annual revenue through GST, government receives almost 22.08 lakh crore worth collections only from GST every year. Monthly collection will be approximately 2.4 lakh crores. When GST was introduced, the monthly collection was only 82,000 crores. Now it got drastically increased to 2.04 lakh crores. So all these highlights the milestone achieved by GST. Right. Now what is this GST 2.0, sir? See, in the 56th meeting of GST Council. So GST Council will be meeting regularly. In the 56th meeting of the GST Council, the GST Council decided, let us not have such 4 slabs. Now let us have only 2 slabs. That is, one is 5%, another one is 18%. Now all the goods and services will be brought under these 2 slabs category. Plus there is one more slab called as 40% slab, luxury items, sin products, that will be brought under this 40% category. Remaining will be brought under either 5% or 18% category. This is the biggest reform which the government has proposed. Along with this, government has said that the government will make the GST registration more easier, the refunds more faster and transparent. So all these are the 2.0 reforms which the government is highlighting.
We've reduced the slabs. There shall be only 2 slabs, and we are addressing also the issues of compensation cess.
Right. So rate rationalization, 5%, 18% tax slab. The luxury items will be on 40%. Registration, returns are being simplified, made faster. almost 75% of the rural monthly expenditure and over 66% of the urban monthly expenditure now will come under either 5% tax rate or nil tax rate. That means a household in rural area, they'll be purchasing every day. They'll purchase onion, tomato, potato, salt, turmeric, whatever they'll purchase, right? That monthly expenditure, they are going to purchase different items. 75% of the items which they purchase will come under either 5% category or nil category. Nil means for those goods, no GST. You buy onion from the shop, no GST. So 75% of the goods purchased by rural households will come under either 5% or nil. Similarly, 66% of the goods purchased by urban households will come under either 5% or nil category. Right? This means just imagine the savings which the household can make. The tax rate has been reduced. Previously tax was imposed, now the rate has been reduced. So the out of pocket expenditure is going to come down. So individuals will be saving money. Finance Minister is estimating that this rationalization of tax structure that is going to result in 2 lakh crore worth money in the hands of the households. 2 lakh crore worth amount will be in the hands of the households because the tax rate has been reduced. Right? Previously I was paying for buying bread. I was paying, let's assume that 10 rupees tax. Now for bread tax is 0. Previously for health insurance I was paying GST. Now for health insurance premium and all, GST is 0. That money is saved, right? That money will be equal to 2 lakh crores. 2 lakh crores worth of money will be in your hands. Now what you will do? This 2 lakh crore worth of money, either you will spend or you will save. India is a consumption driven economy. We consume, we create demand that results in production, that results in nation's growth. Yes or no? You and me. Now imagine, government is coming up with a new scheme. Imagine. Civil Services Aspirants Welfare Program, and every aspirant will be given 10,000 rupees monthly. What will you do? You will spend or save? You will spend generally. Now you will be going out, you will spend money. When you spend means you are consuming. When you spend, that means you are consuming, your consumption increases. When consumption increases, demand increases. When demand increases, to meet the demand, production will increase. When production increases, to produce more, we need more workforce, so more jobs will be created. And this production increase is going to result in higher GDP. Nation income will improve. When GDP increases, government's tax revenue also will improve. Right? Festival season is coming, so government is expecting more consumption. This 2 lakh crores is going to be in the economy, that is going to result in more consumption, more demand, more production. So the finance minister is so confident that our GDP is going to increase significantly because of this move. Right? So what all will be the advantages? But before that, see, I have given this slide. You need not memorize the tax slabs which is coming under 5%. Just for your curiosity I have given. Right? So what are the benefits? Lower prices, higher demand, support for MSME. This reform is going to help the MSMEs because a lot of items will come under 5% category, so that the input cost for the MSMEs will reduce. MSMEs can produce products which is cheaper price, they will become competitive, right? Then ease of living, only 2 tax rates. Multiple tax rates means it's very complex. Only 2 tax rates, easy, ease of living. Wider tax nets, simpler tax rates. When the tax rate is small, a lot of people will come forward to pay taxes. So the tax base will widen. Government revenue, because of the, I said right, 2 lakh crores. Now people will spend, consume, that will create demand, more production, more GDP means more tax revenue also. Revenue will improve, economic momentum will increase, social protection. For essential medicines, government has made GST 0. For life insurance premium, GST 0. For health insurance premium, GST 0. So these are all the expected advantages of the recent GST 2.0 reform. Right? So I hope you got clarity on the topic which we discussed today. So give your feedback in the comment section. Just tell what do you think about this reforms. And I said at the end of the class, I'll give you an interesting exercise. What is the exercise? So now I have given a detailed content about GST. Now, you set a question. I'm asking you to set a question based on this content and put your question in the comment section. Okay, let all the students, aspirants, let them solve. So every one of you can set your own questions. Only when you set the questions by yourself, you will understand the mindset of the question setter, right? Only then your clarity will be improved. See, if you want to set a detailed question, set a detailed question. Or if you simply want to put a statement and you want to ask whether it is true or false, you put it. I will also participate. Let others also participate. This is going to improve more clarity as well. Right, friends, I hope this initiative is going to add more value in your preparation. Also follow our other videos, editorial analysis, etc. So holistically, all our initiatives will help you in your current affairs understanding. I'll see you in another video. Till then, bye. Take care from Guna Mathivanan.